Good morning, good evening, and good afternoon, everybody. Hope everybody's having a great day and a great week and has had a couple great weeks because it's been a while, but we are back. And today we're going to get to a quick market review. We're going to probably talk about the holiday season a little bit, see how things have been going. And also, earnings season has begun. How's the market reacting? What's going on with that? We're going to go over the quick snipers portfolio, still at that 91% win rate, 12 straight wins. We're going to talk about a couple recent trades that we've been going over. Then we're going to talk about a current trade that we have coming today. And of course, at the very end, we'll be taking your stocks, your questions, anything like that. So go ahead and get those in the chat so I can get them in the queue now. But now comes the most important part of the show. Mike, come on, man. How you doing?
I'm doing well, man.
Good.
I think you're the most important part of the show, man.
I don't know about that. I'm just a pretty face that comes on at the very beginning, you know? That's
you are
me.
very handsome. Yeah, that's a good
Hey, I appreciate that.
Hey, buddy, Happy New Year, man.
Yeah, you too. You too.
Happy New Year.
2025.
I got a special Mac that does those sorts
Mine.
of things. Do you have one too?
No.
Oh, okay. That's okay. Not everybody is equipped to handle a Mac, so I understand.
Yeah, true. I just have this old thing right back here, you know? Just this little...
That you made.
Yeah,
you made
true.
that, right?
I did.
Wow. That's crazy.
Well,
All right. Well, Happy
going
New
on?
Year. We haven't been together since right before Christmas, right? It's been 3 or 4 weeks now,
I
and
think the 17th of...
barely,
It's been a month.
it's been a month. So we haven't had a sniper show for a month. We were supposed to have one last week, but we had the Jimmy Carter's funeral, and the market closed down. So we are now clear sailing, and as you pointed out, our earnings season is upon us. And, you know, over the last, maybe we could put up that graphic of the earnings charts because, thank you, buddy. Banks kicked off yesterday. All the big banks pretty much have announced so far, JP Morgan, Citi, BlackRock, Wells Fargo, Bank of New York. And then this morning we had Goldman Sachs, Bank of America, Morgan Stanley, and Bancorp. And all of the banks, for the most part, beat on earnings. And the markets have bounced. Prior to that, the markets were in a bit of a bearish trend. And then starting yesterday, there's, actually a couple days ago, the bounce started, but it was really firmed up by the bank openings. And if we take a look at the futures, I'm going to go ahead and go to CNBC. And I just wanted to show you what the futures look like. This website is called cnbc.com. And it gives you the futures. So the futures trade from Sunday night to Friday night, 24/7. So they don't stop trading, and we can get an idea of how the markets will open. The stock market is not open yet, but it will be here in about 12 minutes. And these future symbols give you a clue as to how the markets are going to open up. So we got the Dow futures, the S&P 500 futures, the NASDAQ 100 futures, and you can see here that the S&P 500, these are the 500 biggest companies in the United States stock market by market cap, the value of those companies on the stock market. So we tend to get a general feel for the markets there. And then you have the NASDAQ, which is mostly tech stocks, and the Dow Jones 30. That's only 30 stocks, but those 30 stocks are tuned, or the index is tuned for 30 stocks that give a nice cross-section of American industry. That's why they're called the Dow Jones Industrial Average. So anyway, the point is that the futures are up a little bit on the S&P and the NASDAQ a bit more. And then if we go to a chart, I'm in the Hub software. And if you don't have this software, you can go to hub.com to check it out because it is pretty darn phenomenal. And this chart of the SPYs, giving you a lot of stuff here this morning. The SPYs is an exchange-traded fund that tracks the S&P 500. It's a stock. It has options. You can buy the stock. You can short the stock. You can put option trades on the index itself, on the SPYs. It also pays dividends, and so does the diamonds, which is the Dow Jones Industrial Average. Let's click the diamonds here. And we can just kind of take a quick look through the markets. The Qs, the 3 Qs is the NASDAQ. Again, these are all stocks. And then we also have the IWM, which is the 2,000 smallest companies in the U.S. stock market. So as I went through there, you'll notice that we've had a bounce over the last 3 days. Banks came out with earnings there. Let's go back to the SPY chart. I don't want to go through all of these. Pretty much the charts are the same, but look what happened here. Now, during the holidays, before I talk a little bit more about the bounce here, over the holidays, there was extreme volatility. The Fed came out here and said, yeah, inflationary risk, Trump's tariff and tax cut policies may exacerbate inflation. We may not cut as much next year. We're going to be very cautious. The markets go, oh no, boom. And then we get a bounce up, and then we get another correction, then another bounce, then another bigger correction. And then here on this day, we got a nice little bounce. That was on Tuesday. And then banks came out with earnings yesterday, big gap up. And today, the futures are pretty flat. Now, do you see this red line here, Ryan? You know what that is? I think you know. I don't want to put you on the spot.
50-day moving average?
Yes, it is.
Yes.
And the 50-day average, Ryan, you see there, it hits the 50-day average and stops. And with futures, pretty flat, slightly higher, 59.95, which corresponds to 599, 590 or so here on the S&P 500 this SPY chart. Doesn't look like we're going to be above it this morning, despite bank earnings. So we like support resistance here on this show. The sniper system really relies on support and resistance. And, we've got a resistance level here. So where do we go from here? I don't know. Monday, Trump takes office in the United States. What's that going to do? Well, the last time when he won the election, look what happened. Ba-boom, gap up right after the election. So Trump, one thing about Trump's presidency from, 4 years ago, that ended 4 years ago, his prior term, 2 terms ago, a lot of volatility in the market. So that should be good for us for opportunities, but with that kind of surprise stuff that happens when he speaks, we could see some surprise gaps against us. So we got to be really careful starting next week. But it looks like the markets are running into the inauguration on Monday, and I anticipate that'll probably happen. We'll find some resistance right up here at 6,000. Right there. Notice that. Look left. Resistance here, became support there, was resistance here, was resistance there. Round numbers are the best support resistance levels. Okay, so we're going to use that as we go forward. Right here on the Hub channel every Thursday morning at 9:15. Now, let's take a look at the last trade we did. We placed this trade on the 19th. Okay, so this was the last show that we had. And we placed this on Palantir, a tech company. The stock gapped up on really good earnings right there. And then the stock kept going. And then about a week later, we took this trade off for about a 12% profit. Okay, so that is our game. We're going to do a live trade here in just a minute. I've got 6 minutes before the market opens. And I do want to, let's go to the other chart here, Ryan, with the performance, because we've been doing really well. What you'll see here, sorry about that. I'm giving everybody the infinity experience. So if you look at the performance for 2024, all of the trades we did in 2024, we had 58 total trades. That makes sense. We do about 1, maybe 2 a week. Sometimes we do more than 1, but 58 trades over 2024. We had 53 of the 58 trades as winners and only 5 losers. That gave us a 91% win rate. And our average profit, when you bake it all together, you combine all the losses and all the profits together, we netted, on average, an 11% return every 6 days. All right. Now, when somebody that sees snipers for the first time sees our average win rate of 10%, normally it's 10%. So we did a little better than normal last year. So 10% is about average. People go, 10%, that's not a lot of money. Well, If it only takes you 6 or 7 days to get it, you could take the same money and trade it 4 times. 4 times 11, you can do the math. So the point is, just these small, high probability profits, 90% win rate is where we normally reside. That pays off. It's like baseball, Moneyball, the movie Moneyball. Get on base, get on base, get on base. Don't have to hit any home runs or doubles or triples. Just get on, or even hit. Just get on base, and let the runs stack up. And that is exactly how the system came to perform last year. And I said in January, that's what it normally does. And that's what it did. So if you want some of this, come to see us. Brian and I are every Thursday morning, most every Thursday morning at 9:15. We're here and we snipe away. Okay. Now, one thing I want to do quickly is show you the banks. Well, you know what? I don't have time. I'll come back and show you banks here in a minute because I do want to get on this trade here. There's many banks that have announced today and yesterday, and Morgan Stanley is one of them. And if you pop up that graphic, Ryan, Morgan Stanley. Oh, there we go. We got it. So Morgan Stanley tops estimates, and pretty much all the banks did. Fourth quarter results surpassed Wall Street estimates, aided by a 29% gain in investment banking throughout the quarter. And that's pretty much been the case with JP Morgan and some of the other banks. So the banks are pretty much coming out with really good earnings. But what gives me a little bit of pause is if you take a look at the XLF. Okay, so this is the ETF that tracks the financial sector. It includes all those big banks and other financial companies. But we did get our gap up yesterday from the prior banks. And right now, the XLF is due to open up just a little bit higher. So the XLF is doing well. But when you take a look at, let's just go through some of the other banks here. And so this is going to have something to do with my directional analysis. So if you take a look at JP Morgan, they had a really nice day, but they pretty much closed at the upper end of their range. JP Morgan came out yesterday, could be a good target. Citi, nice move up yesterday. BlackRock, below the 50-day average. Goldman Sachs, nice little run up to resistance. It's at resistance right up here at the top of those bars. So the reactions have been pretty good, but not as high as I was expecting. So I'm going to be really cautious. That's the point. I'm going to be really cautious on Morgan Stanley. So let's take a look at the chart and let's figure out where we want to put our line in the sand. Okay, so this is the chart as of yesterday, and Morgan Stanley is due to open up just a little bit higher. All right, now where could we sell? Where could we put our lines in the sand? Now, what's a line in the sand? A line in the sand is support and resistance. It's just a colloquial way to say it. I don't even know if I said that word correctly. It didn't sound right.
Sounds good to me.
Sounds good to you. All right. All right. Colloquial. So that's not a word I say very often. I probably said it 10 times in my life. All right. So the Morgan Stanley is going to open up a little bit higher. They had good news. They didn't lift their future guidance, which gives me pause a little bit. I'd rather have lifting future guidance. I'd rather have that. The other thing I'm looking at is this 135 level. Look at this. Why is Mikey drawing a line at 135? Why is he doing that? Look left. Resistance, 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 resistance. Okay, so the stock is opening up slightly beneath 135. So that could be that is resistance that could hold. So when you see that, stock gaps up to 134-ish, 133, 134, we're going to watch it open here. There it is. It just opened up at 132. What might happen if it hits 135? Well, the last time it did it, it came back down. It's stalled and then came back down. So that could happen again. And I just don't want to have my line in the sand too close to the stock. 130, no way. Although it's a nice, this is 130 right here. That's a nice support level. That is really playing with fire. But I'd say 125 is the closest I would get. And we might try for it. But heck, if I could get something down here at 120, we would make money anywhere above 120 over the next 2 weeks or so. And the chances of that, they had great earnings and they could drop a little profit taking. But man, the story is better here than it was there and certainly here. So that's where I'm going to try for. And we'd make money anywhere above 120. Stock goes sideways, we make money. Stock goes up to 135, we make money. Above 135, we make money. Stock drops, we make money, we make money, we make money. And as long as it's above 120, we're going to make money. We make money anywhere above 120, up, down, sideways. That's the high probability. Now, I'm going to go into, I'm moving a little bit faster here. I'm going to go into Thinkorswim's simulated trading environment. So I can demonstrate how to place these trades live. So let me see what we can do here. So I'm going to look at the 120, 119 short put spread. So here's how you build a trade that makes money anywhere above 120. Well, you sell the put at your line in the sand. That's 120, and then you buy the underlying. So this is a credit spread, and currently the pricing is showing 27 cents. I don't believe that the market is open quite yet because that's what it was pre-market, but we're going to try for it. And as long as I can get 10 cents here, I'm happy. All right, so let's just try for 27 cents. I think it's going to be closer to 10 once we get started. Use a GTC to spur on a faster fill. It sometimes works. I'm going to use a GTC to enter the order, selling the 120 for Jan 31st. I've skipped this part. That is a 15-day option. That's our sweet spot. 2 weeks or so is where we like to sell our credit spreads. Our credit spreads will expire. The trade will end before 2 weeks is up. That's where the short-term part of the short-term high probability mantra for our show comes in. All right, so I'm yapping a lot here. Let's go ahead and place the order, and I'll refresh it here in a minute. All right, so I went ahead and put it in there. And now under open orders here, you can see that current price available for Morgan Stanley is, well, that was yesterday's price, was 27 cents. That's what I'm asking for. It appears that the options market is delayed, a delayed open a little bit. So we'll have to wait until the option market opens, which will happen here in just a minute. Okay, so let me give you the trade in a easier to understand format. And if any of you are simulating this trade, playing with it, then and you get filled, please let us know. Let's make it a little interactive with you all. So here is the trade. We're selling to open the JPM Jan 31st. That's the expiration date. 120 short put, and then we're buying the underlying put here at 119, and you want to get at least 10 cents for it, and that's probably what we're going to have to get or try to get later once the option market opens. Should be very shortly, and then that's our order. Now, once we are filled, I got to check. Oh, see, now it's only down to 3.5 cents. Okay, so yesterday it was worth 27. Last night it was worth 27. Today only 3.5. So what does that mean? Well, it means that our line in the sand isn't close enough. So what I'll do next, there's two approaches here. So the stock is running up after the open. It's going to hit 135 here, looks like. Round number, resistance level. And one of two things is going to happen. Well, one of three things could happen. One, it could stop dead around 135. That would be cool for a credit spread underneath, or it could break above 135 and keep going, or it could do one of these numbers. So that is what makes these a little bit riskier when the stock gaps up to resistance. So one of the two approaches we could handle here, or use here, is one, just let this sit at 120 and catch the credit if the stock starts to run down a bit. If the stock runs down a little bit, this credit here, which is currently 3 cents, will get higher. And for example, if the stock dipped down to 130 or so, then we would likely get filled. So that is what we call let the trade come to you. That's a valid approach, and probably the best approach given that the stock has this resistance level. Now, so that is the most prudent way to handle it. The other way to handle it would be to lift up your line in the sand a little bit closer, maybe there, and that level is 120, let's say 122, 122. 122 is right here. Yeah, so there's 122. I think that's as close as I'd want to get. And, those of you that are more aggressive, you could go to 125. That is the absolute closest I would say you should even think about. But let's go a little bit lower and see what is available down here at 122. I'm going to use this charting tool here and get the line exactly where I would like it. 122. All right, so that's where we're going to think about selling. Let's see what's there. 2.5 cents, not much. So I'm going to cancel, replace this one, and I'm going to lift up the short strike to 122, and there's no credit there either. So what I'm noticing here is that, let's just see. If we go to one, keep an eye down here in this credit. So as I get the short put closer, moving our line in the sand up. If I go to 124, there's only 6 cents. 125, there is 10 cents. So based on our rules, which is the minimum credit should be 10% of the spread width. That's $1. We want at least 10% of $1, which is 10 cents. So there's 11 cents now available at 125. And that would put us right here. That is a little hot, especially given there's resistance up here. Look left, resistance at 135. We could see this thing come down. But that's a decent level, but no closer. So let me try one more thing. I'm going to go back to 122. And then I'm going to go out one more week to Feb 7. So I'm going to add another day of time, another week of time. And I can see there that if I go to Feb 7, that's 22 days, there's 7 cents there. All right, that's closer to 10. So I tell you what I'm going to do here. I'm going to be patient, and we're going to make this 10 cents at 122 for Feb 7. And let me reflect this. And actually, the mid price is 9 cents now. All right. So what we're doing here is we're selling this put right there at 122. So let me reflect this correctly. And we added one more week of time. So this is the Feb 7s. I know I'm moving around a lot. Feb 7. Okay, this is what I'm going to put in. And I'm going to put it in as a GTC, and hopefully we'll get filled. Sell to open the JPM Feb 7 122 put. Buy the underlying 121 put. Do it for 10 cents. Let me go ahead and hit the send button. It's now at 6. Again, this is the only way this is going to fill if JP Morgan dips a little bit during the morning. All right, Ryan. One last thing. If you do get filled on this, then you want to do the most important part, which is manage the trade If the stock closes less than 122, which is our line in the sand, close the trade down for a managed loss. You got to do that. That's the most important rule, which is why it's first. And then once you're filled as well, you would put a good till cancel GTC order to buy the spread back for 10% of the original credit received. That would be 1 cent GTC. And that way, automatically your profits are taken off. And the only thing that you need to do is to make sure that you're keeping an eye on the stock. And as it approaches the 122 level, keep an eye on it. And if it closes beneath, close the trade out for a managed loss. So that's what we got on Morgan Stanley. And if you like the banks, there's plenty of other banks. I mentioned some of them before. You can do the same approach on another bank, perhaps. All right, Ryan, that was a lot. As we have to kick the year off with some review, and we've covered a lot of stuff. But any stocks we can look at?
Yeah, we do. We got first up from BCZX11BC says TSM.
Taiwan Semiconductor. Yeah, let me go to a different place here. Taiwan Semi, they announced today. Let's take a look here at the stock chart. TSM is the symbol. It usually shows up as TSMC on a chart. But yeah, look at this. This is really interesting. Now, here's the deal. This is probably the most subtle. It's not really a subtle rule, but do you happen to notice that dead on 220, which is where the stock's at 219.29 right now. This is resistance. So this is one of those things you've got to really watch out for, because the last time it hit 220, it stopped there and then fell away. So that could happen again. Not ideal. So you got to be really careful with these. Give it a bit more time and see what it does maybe later in the morning. And certainly tomorrow you could look as well. But what you got to watch for is some of this, like another big correction. So the other thing I want to check is news. Let me get rid of these lines so it's a bit more clear. Now, news is an important point here for us, an important rule. And I'm going to go to finance.yahoo.com. I think we just got filled. Yeah, I just got filled for 12 cents on Morgan Stanley at 122. So if you put that order in, you may have been filled. That was that. Yeah, Morgan Stanley. Let's see what the stock's doing. It must have come down a little bit. See that? So the stock has come down a little bit, and then we got our fill. Now that the stock's come down a bit, you can also take a look at 120. But 122 is a nice level. Stock's come down just a little bit. It's still up for the day. So that is now filled. You should be filled too if you're playing along. Okay, let's go to the news for Taiwan Semi, because they had earnings this, wait a minute. When is their earnings? That's on that, hold on a minute. Let me go check here. Taiwan Semi, yeah, they announced this morning as well. I just wanted to be absolutely clear. So they announced earnings this morning as well. Let's see what they were. All righty then. Taiwan Semi, let's just see here. Just looking for their results. That's weird. I'm not seeing it. That is interesting. That's okay. I can go into Thinkorswim's news and we can look from there as well. So let's go take a look at Taiwan Semi, TSM. And then the news is very granular here, but it takes a while to get through it. So let me just go into the news here and see what they actually said. Taiwan, I don't know if you can read this. I can barely read it. Taiwan Semi manufacturing the primary advanced semiconductors, including those designed by NVIDIA, used for artificial intelligence. Reported fourth quarter net profits rose 57% from a year earlier. That's real good. Revenue rose 39% from the prior year. The company said it expects first quarter revenue between 25 and 25.8 billion, up from a year earlier. So they blew it out. They blew it out. And I don't know if I see anything on my future guidance. Let's see. They blew out their earnings. Really good. Okay, so Taiwan Semi blew it out. Let's go back to the chart and let's derive our line in the sand. See, already it's happening. You got to watch this, everybody. The stock hits 220. It was above 220, just like over here. And now it's starting to come down a bit. How low could it go? Well, it could go to 200 in a heartbeat. I think 200 would be, I don't like it at 200. Why? Well, the 220 resistance. Okay? So I would rather be lower. If we could get something down here at 190, I would take it. Because then we could survive a corrective move after touching resistance. So 190 would be good, and maybe even right up here at 195. So 195 is below 210 support, and it's below 200 support, and it's below this 50-day average right there. And 195 has 1, 2, 3 levels of protection, and 195 itself, if you look left, is support resistance. So that is the only place I would do it. Let's see if there's any money there. And I'm going to go out. We're going to use 15-day options. Let me see what's available down here. Now look here, 195, 192.50. Those are the only strikes available. And if you sold the 195 and bought the 192.50, that would be a 2.5 point credit spread. So $2.50. So therefore, my minimum credit would be 10% of $2.50, which would be 25 cents. So we got to get at least 25 cents. I'd put this in as a GTC. If you do that, watch and just wait. And don't do anything else. Just let it sit. And if Taiwan comes down a little bit and that credit gets to 25 cents, you'd be filled. We're only 7 cents away, so decent chance of that. Let me give you this trade. And we've got Jan 31st as the expiration date, 195, 192.50, and give that at least 25 cents. So you're going to let the trade come to you. It's either going to fill or not. If it doesn't fill, look at it again tomorrow and derive a new line in the sand. But that's as close as any of us should get, given that the market's only 18 minutes old this morning. So here it is. Sell to open the TSM Jan 31st, 195 put, buy the 192.50 put beneath, get at least 25 cents credit. Follow the rules to manage the trade. So that's a decent one, Ryan. I like that one.
Very nice. Very nice. Got time for one more?
Yeah, let's do one more.
Let's look at Microsoft.
Microsoft, it's not on my radar this morning. I'm interested. Somebody must know something. Microsoft. The chart's not particularly interesting. It does look like the stock wants to stay above 415. Let me tell you why. A little basic technical analysis. That there, it looks like Thor's hammer. And so does that. There's a handle, there's the hammer, and there's a little top part of the handle. Hammer pattern right at 415. Yesterday, a big gap up above the 200. Stock's now wrestling with this resistance level here at 430. If I was to give you all one thing to get really good at in sniping and any other strategy you use, it's to really start to get good and be disciplined about identifying support and resistance. Can you see how 430 was resistance there, support there, support there, support, resistance broken there? So that is a very key level, and Apple is going to have to bust above it in order to have a prognosis that it's not as likely to do this. So the pattern is it breaks down to 415, it goes up to 430, it goes down to 415, it goes back up to 430. If this pattern continues, guess what's next? Microsoft could very well drop back down to 415. So I don't like this one. I would use other types of strategies. You could check the news. Microsoft was up big yesterday. Let's just see if there's any compelling news. And we don't take sniping trades unless there's news on the day, or maybe a day or two later. And so I need to see that. And let's see if I can get it to paint. There we go. What's the news? Quantum computing, blah, 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 blah. Now, Microsoft introduces Copilot chat. That's probably an AI chat without even looking. Not seeing any news that I'm excited about. So I would leave this one alone. And Ryan, this might be a good time to talk about our guidebook, because this does not fit the entry criteria for a snipe. But the guidebook will walk you through every single step. There's 5 main steps: identifying the opportunities, understanding the types of news that are the best, that keep directional probability intact, the world of credit spreads, how to construct a bullish and a bearish credit spread, and then managing those trades. So this guidebook is absolutely free. There's a link below my face here, and on the recording there'll be a link. You can grab it. We just need your name and email address. We'll email the guide to you, and then you can read the guide and be ready next Thursday at 9:15, Ryan, when we'll do this again, right?
Can't wait.
Me too. I love this. This is one of my favorite trading strategies, if not my favorite. It's a lot of fun. I do this every morning. Every morning I do this, and we just happen to share this for free to all of you that are interested in some high probability short-term profits. You can follow along, and you have a pretty decent chance of doing what we did last year, because we're doing the same thing. Rote systems. Ryan, I missed you, man. It's good to see you.
Yeah, good to see you too. Good to hang out again.
Always. You got to come on down here to Costa Rica, man. Bring your family.
I'm down.
You got monkeys.
I'm down.
All right. All right, brother. Well, thanks, everybody. Have a good week, good weekend, and we'll see you next week at 9:15 Eastern Time. Bye, everybody.